Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX Global, bringing you the morning comment for the 8th of March. China's February exports collapse. Overnight, China's dollar-denominated trade surplus decreased by much more than expected in February. This was a result of a 25.4% year-over-year fall in exports, more than double the expected slide, and the largest fall in over 6 years. Imports fell by 13.8% from a year earlier, also below the forecast of minus 10% year-over-year. Although some may see February's data as a distortion caused by the Chinese Lunar New Year, taking a look at January's terms of trade, we see that both exports and imports fell by double digits as well. This suggests that the economic activity in China has yet to stabilize, but we prefer to wait for the March data before we arrive to any safe conclusions, as these figures will show if China's decision to cut the bank's reserve requirement ratio had the desirable effect. Now, as for the energy market, WTI prices rallied yesterday and touched $38 per barrel after Ecuador called for a meeting of Latin American producers at the end of this week to discuss a common position on oil prices. The oil rally may have also been supported by an announcement from the US Energy Information Administration on Monday, stating that it expects oil production in major shale extracting regions to drop notably in April. These developments add to hopes of a gradual balancing in the supply side of the oil market. Should Latin American producers manage to reach a consensus on Friday, this could be viewed as a first step towards an agreement between most of the major global producers, something that could support black gold prices even further. As for today's events, Germany's industrial production for January is already out. Industrial production rose by more than expected after falling in the previous month. Eurozone's final GDP for the fourth quarter is expected to confirm its preliminary estimate and to show that the bloc's economy grew by 0.3% quarter over quarter. As such, the reaction in the euro may remain somewhat limited at the release unless we have a major revision. In the US, the NFIB Business Optimism Index for February is coming out. Even though this indicator is not a major market mover, it is worth watching because of the Fed's emphasis on employment, as small businesses employ the majority of people in the US. From Canada, housing starts for February are expected to have risen, but building permits for January are forecast to have fallen. Since the expectations are mixed, any strength in the loonie on the housing starts released could be offset by softer building permits. As for the speakers, Bank of England Governor Mark Carney will speak before the Parliament's Treasury Committee on the economic and financial costs and benefits of UK's EU membership. When asked about potential referendum outcomes at the latest inflation report hearing, Carney said that the bank is making contingency plans and that it could ease policy further if the situation requires so. Although the governor's comments passed relatively unnoticed at that time, a possible reiteration of that view could reverse some of the pound's recent gains. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX Global, wishing you solid trading.